Liquidity is literally one of the most important things in trading, and without having a good understanding, in fact an amazing understanding of liquidity, it is so hard for you to ever become profitable. And that is why in today's video I'll be going on the charts, showing you my previous trades that use liquidity, showing you examples on the charts, and just basically telling you exactly how to understand liquidity just like me, so you can literally pass funded accounts, get payouts, and see actual results in trading. So yeah guys, this video is going to be liquidity part 2. It's going to be absolutely life changing for a lot of you guys who struggle to understand liquidity. Now I'm doing this all for free. The only thing I ask is that you literally just subscribe, like the video, and I've also started a new Instagram account, and I'm going to be doing a giveaway on this Instagram account at 500 followers. So follow this right here on the screen. I want every single viewer to follow this because there's a chance for you to literally win a free challenge account, and all you need to do is follow this Instagram and you'll be entered into it automatically. So guys, the free value is literally insane, and I'm sure so many people are going to literally change their lives because of this series. Now, in order to help you even more, I have a free community with 1,000 members in there. I trade live every single Friday with them for completely free, and if you want to join that, literally all you need to do is press the link below and you can join for completely free. And inside you're going to see my live trading. I'm going to break down trades for you guys. I'm going to literally help you guys all out for even more free value. And all you need to do is press the link below. Okay, but other than that, let's get onto the charts, guys. I hope you enjoy my new chart colors, by the way. I switched it up so it can match the brand. And yeah, I mean, let's go onto the charts and I will show you guys liquidity. And seriously, before I get into it, get out a piece of pen and paper. Not a piece of pen and paper. Get out a pen and paper. Make some notes because, bro, guys, the stuff I'm giving you is literally what people pay thousands for. And I'm giving it for free. So if you're not actually taking value from this, you're wasting your time and there's no point in you even watching the video. So get out a pen and paper, get out a Word document on your laptop, make notes, and you guys are going to see results. So let's go and let's get into the video. Okay guys, so yeah, in the last video I went over liquidity and I just kind of showed you examples without actually going on the charts. But in today's video, I'm going to go on the charts and I'm going to actually find some real life examples of liquidity, explaining basically the concepts that I said before, but this time now on the chart, so that you guys can actually get a good idea for what liquidity means when you are actually trading. Because I know I went over examples before just using the path tool like this, but it is a lot more complicated than just understanding that. Okay, and if you haven't watched my previous video, then go check that out first. But yeah, and also we've got new chart colors. Okay, so smiley face if you rate it, sad face if you don't. Yeah, like this is gonna be the chart colors from now on. Now, first point of liquidity, right, as I said before, is going to be simply resting above highs and below lows. Okay, so every single high and low in the market has liquidity. Okay, no matter if it is, it's this high here or this low here, whatever, right? Any single high or low has liquidity above it or below it, right? If it's a low, liquidity will be below it. If it's a high, liquidity will be above it, right? But that's the first thing you need to understand, because when you understand that, then your understanding of trading is going to just massively improve, because now you understand that when we sweep a low or a high, because we've taken out liquidity and we've taken out orders from the market, there is now enough fuel to take the trade. So using this same concept, actually I'm going to show you some examples before I explain exactly what I was going to do. But we can actually look right here. Okay, this is actually a trade which I took on Monday. And there's 2 winning trades using liquidity, which I'll explain in this video, okay? So Monday's trade, right? As I mentioned to you guys just now, there's liquidity below lows. Now, this is a very, very clear low in the market right here. And the reason it is such a clear low is because, I mean, you can just see it, right? This low right here caused a massive move to the upside. So there was a lot of buyers coming in from this area, and then there was a lot of liquidity below this area right here, okay? So what price does is it's eventually going to come down, sweep out this liquidity, which it did right here, okay, taking out all of the buyers from this level right here, and now there's enough fuel to move it to the upside. And that is how liquidity sweeps work. When you take out a significant low or high in the market, there is now going to be enough fuel to drive it in the other direction. And based off this this fact, I was able to take a trade right here, and I ended up actually hitting a really, really good trade. Okay, so yeah, that is the first example of how you can use liquidity in your trading. You look for it below and above highs, okay? So yeah, that's number one. Now, another example I'll show you is literally from, what day was this? This was yesterday, right? So this is Wednesday. Wednesday, I took another trade here for the exact same reason. We had liquidity resting below this low right here, okay? I'm going to get rid of this zone. This is a demand zone, which I haven't actually gone over yet. But we've got liquidity resting below this low here. We sweep out the liquidity, okay? So we've now taken out orders of people who are buying at this level that I've just marked out here. And then when we sweep it, guess what happens? We see a big reversal to the upside. I take a buy, and I'm able to profit quite a lot in this trade as well. And that's literally just from understanding that there's liquidity resting below lows and above highs. Okay? So, yeah, Bruno, does that make sense?
Yeah, just a recap really of episode 1.
Yeah, it's just a recap, and it's literally just now looking on the charts, right?
That one looks mad though. I want to know why that just dropped there at the
This?
end of that consolidation. Yeah.
Yeah, I mean, the reason that would have happened is because it would have been going for these lows. So this would have just been a build-up of liquidity, right? So if I just mark it out as like this right here, right? This whole area, because it's not really moving much, and because it's basically just literally just consolidating, it's just kind of going in one, straight line like this, not really forming any crazy highs or crazy lows. This is what is known as consolidation, and it's basically just building up, liquidity on either side of the market. Okay, so there'll be people selling from this kind of area up here, right? When price comes into this area, they sell. When it comes back in, they sell. And the same thing goes for down here, right? At the bottom of the range, when price is coming down into here, they're buying, and then they're buying here, okay? But what this is doing is it's creating orders on both sides of the market. And when it's making these orders, there will eventually be a move in one direction, right? To take out one of the orders from one of the sides. Now, what you're seeing there is that move here. So there was loads of liquidity being built up in this consolidation. If I was to kind of just draw it out, with this tool here, we're not really moving anywhere. We're just kind of literally just ranging like this. Then we see the big move down. And where do we go? To this low right here to take out the liquidity from this low here. And then we go back up to then take out the liquidity that we didn't take out from the top of this range right here. So yeah, that's like how this would actually work. And this is a really good example, very actually similar to the first thing I spoke about in part 1 of liquidity, where we have a range and there's liquidity either sides. You take out one side of the liquidity right here, taking out the liquidity resting below this area right here. So there'll be liquidity below all of these lows here, which we take out, okay, from this consolidation range. And then we target this low here. And then when we take it out, then we shoot up like this. And then our target for this is going to be the liquidity resting above these highs up here. Because like I said before, there's liquidity above the highs as well. So there'll be liquidity up here, which you can target. And that's kind of what price does. So yeah, does that make sense?
Yeah.
Yeah, I mean, that's actually a really good example, bro, because I was looking for one just like that. And then you found that. And it's a literally perfect example. Like, that is honestly a great example of a build-up of liquidity in like a consolidation range, okay? And then a shoot down to grab even more liquidity from this low here. And then only when you see that, only when you see it's actually hit its target liquidity, that's when you take the trade, okay? And then, yeah, your target can be basically the top of this area up here, anywhere around there, okay? And yeah, really good example of like a consolidation range. Now, the only other thing to actually speak about here is going to be just in general Asian range liquidity. And here's actually a good example to show you right here, okay? Now, in trading, there's, like I said, 3 different sessions. Now, Asian session tends to consolidate. Asian session is going to be shown by this white box right here. And by the way, if you want to have this white box on your chart, you go to the indicator section on the top, press on indicators, and go to this one here called Asian Range by Nico 948. Press on this, and it's going to bring up this exact indicator on your charts right here. So one more time, just this one right here, okay, if you need it. But yeah, press on that. That's going to bring up this indicator, and that is the Asian range, okay? Now, very, very similar to this example right here. In fact, you can actually see it happening here because Asian range is in this consolidation period. The Asian range is going to consolidate, okay? And it isn't going to have much volume. because now the reason why is because we're trading the pound against the dollar. So it has nothing to do with any Asian timing, right? The Asian timing of the market is going to be on pairs such as the pound against the yen or anything to do with the yen. That's when there'll be volume in the Asian session. But because this Asian session is not to do with what we're trading, the pound or the dollar, there'll be no volume in that session. So the Asian session, when you're trading the pound against the dollar, will consolidate. But when you're trading something like the pound against the yen, because the yen is obviously to do with the Asian session, it's going to have more volume. So in what we trade, the pound against the dollar, Asian session is going to consolidate. So as you can see there, it's not really moving much. And there's going to be liquidity, yet again, above the highs and below the lows of Asian range. So Asian session high liquidity will look something like this, right? Liquidity above it. And what I'm actually going to do is I'm going to replay the charts and show you exactly what happens, okay? So we've got liquidity above the Asian high. Let me actually replay it one more time. Like this, right? So this is the Asian session, like this, consolidating, not really having much volume. And then we've got the Asian low below it, like this. The Asian low actually is this white line, by the way, but just so I can see it, I just draw it a little bit below. So it's going to look like that. So there's liquidity above this Asian range high and below this Asian range low. Now, we know that when we take out highs and lows in the market, when we take out significant points of liquidity, there'll be a move in the other direction. So what we see is, if I just play out charts, we take out the high. So we've now taken out Asian session high liquidity. And actually also, we've taken out the liquidity from this high here as well. Okay, so there would be liquidity above this high right here. Okay, because this is a quite clear high. So we would sweep this as well, right? And then when we sweep that, then we start to go down and we target the Asian low, which is right here. So now that we've taken out the Asian low liquidity, now there's enough fuel to go in the other direction again, because we've taken out Asian session low, right? And when we take out a low in the market, there's going to be normally a reversal in the other direction. So then what you see here is that reversal, right? And it's all to do with the Asian session. There's liquidity above the Asian session high, which we take out here, and then see the move down. And there's liquidity below the low, which we take out here, and then move up. So
Yeah.
really, if you were going to trade purely based off liquidity, those are two actually really good winning examples, which you could have caught if you were purely just trading Asian session liquidity. You would have sold here when you see the sweep of Asian high, something like this, and target Asian low. And then you could have also bought here when we sweep the Asian low and start to see some reversal with your stop loss below the low and target the previous high, which is up here. And then it would have hit. And I don't really know what happens after that. Yeah, she keeps going up. But yeah, that is essentially the Asian session liquidity explained very, very simply with a good example. And you can see it actually just works. Like, that was a purely like random day. Well, it wasn't random because I knew it happened, but it didn't know like I wasn't really looking for a perfect example, but that is a good example. And you'll see it happens over and over again. The same thing here. Asian session wasn't really moving much, just consolidating. We sweep the lows of Asian session right here. We sweep this liquidity, we go up. Now, more examples here. The Asian session sometimes isn't going to consolidate. It doesn't consolidate every single day. Sometimes there'll be, an odd day where it doesn't consolidate. But even on this day where the Asian session isn't actually that great, we still sweep the highs, right? We still sweep the highs from here. We still sweep liquidity from this high right here. And then at some point, the market does move down, okay? So there still was a move, but the Asian range on this day just didn't really consolidate it much. So this is when you don't really want to trade the Asian range, because it isn't consolidating as much as we would want it to. Now, the whole Asian range strategy, this is what I trade, and I will have a separate video, multiple videos on this coming out later, on which Asian sessions to trade and which ones not to trade. So you got to make sure you're subscribed so that you don't miss out on that video, because that was going to be like seriously a life-changing video for a lot of you guys who want to know how I trade. But for now, that is basically liquidity explained. Okay, there's also other types of liquidity, which let me explain it, one more right now, because there really is so much for me to cover. All right, guys, now this is arguably the most important form of liquidity, and this is liquidity from supply and demand zones. Now, I'm going to explain this right now, and you guys are going to seriously have a great understanding of this, okay? So, going back to this example right here that I actually mentioned, I traded on Wednesday, there was a loss that I took before this winning trade. Now, the loss happened from this demand zone, which was right here, okay? We had this area of demand right here, which I'm going to mark out like this. Okay, we had this demand zone here, and I actually took a buy, right? I took my first buy position right here when we came into this demand zone and saw a good reaction and saw all my confirmations to take the buy. I took the buy here, okay? But what ended up happening is this buy ended up losing, which is totally fine. You're not going to win every trade. It ended up losing and then actually sweeping the liquidity from this demand zone, and then the move up happened, okay? So this is super, super crucial, and this is where a lot of you guys don't actually see results in trading because you don't realize that there is in fact liquidity below demand zones. And when you take out a demand zone, it doesn't necessarily mean the market's not going to go up. It could have just been taking liquidity from the demand zone to then go up after you've taken out liquidity and stopped out all of the people like me who ended up buying for the demand zone. And now that we've been taken out, now there's enough fuel to take it in the other direction. So not only was there liquidity from the demand zone, we took that demand zone. We took out the liquidity from this low here, which I mentioned to you guys at the start of the video. And then the move up happened right here. Now, it's super, super important you guys understand this because there is always going to be a chance that your demand zone isn't going to hold. It might sweep the demand zone, but that doesn't mean that you can't trade the demand zone. That just means it simply took out the liquidity. You know, maybe it stops you out in the demand zone, but if you see a confirmation to re-enter after it sweeps the liquidity, then you need to make sure you have the confidence to go and do that, okay? Because that is still a possible winning trade. But all that happened is the markets took out the demand zone because there is going to be liquidity from the people buying at this demand zone. And sometimes it's not going to react straight away. Sometimes, like you just saw there, it stops you out first, then sweeps the demand zone liquidity, and then the move up happens. Now, in my free community, I've actually broken down this trade right here. So if you guys want to go check this out, I recommend going and joining the free community. It's totally free. The link will be in the description. So you guys can actually stay up to date with all of the trades that I take. I break down every single one in my free community. And also in my paid community, I actually called out both of these trades. I called out to them the losing trade, which was right here, and also the winning trade. So you can see right here, a small loss right here, taking the trade from this demand zone, which was right here, okay, as I said to you guys there. But then we did end up getting a win when we entered again, and as you can see, loads of other people in the community caught the win as well. So Elvis, this guy right here caught the win, Olu caught the win, so many people caught the win, and it's because we understood that yes, we had that initial loss, but there was also enough liquidity taken out to fuel another trade, and that trade covered the loss plus made us profit for the day. So that is literally such a valuable example of liquidity. Now, it's going to be difficult for you guys to actually understand this without going back on the markets and actually testing this out for yourself. So some homework for you guys is to maybe, you know, do some backtesting, find some examples of demand and supply zones, or in general just liquidity, right? And just see how price reacts when it takes out that point of liquidity. And I guarantee when you start trading now, you're going to realize that these sweeps of liquidity happen over and over again. And when you can understand them, that's when your trading will go to a whole new level because you're going to be able to catch these moves after a big sweep of liquidity. Now, one more thing as well. If you don't understand about demand and supply zones, because I haven't made a video on it, that's totally fine. I will be making a video on it literally tomorrow or the day after, and I'll be posting it probably on Monday or Wednesday next week. So stay tuned for that, okay, if you want to understand about demand and supply zones. And other than that, guys, that is the video done, okay? This has been a really detailed video on liquidity. I really think that you guys need to make sure you maybe even rewatch the video if I went over something too quick. Rewatch it and then actually make sure you're learning it. Make sure you're taking notes and screenshots of my charts because honestly, guys, this is information that people don't give you for free. Now, yeah, I mean, it generally is very good information, and I think you guys should all be seeing the value in it. If you are seeing the value in this bootcamp series and you want me to continue, let me know in the comments. Make sure to smash the like button. Make sure to subscribe. And as I mentioned before, if you want to join the free community, guys, there's 1,300 members in here, all loving it, all seeing crazy results from, you know, the trade breakdowns I send in for free. Go and join it with the link below, okay? But other than that, Bruno, does that make sense, first of all, bro?
Yeah, all good, man.
Cool.
Progress.
Good man, good man, good man. But yeah, other than that, guys, I'm going to end it there. Thanks for watching, guys, and I'll see you on the next episode.